Okay, welcome to today's show. Very excited to have Brad Yasar here in the studio. Brad is one of the people I look up to in blockchain, cryptocurrency, and overall entrepreneurship the most. Thanks for being here today.
Thank you for having me, Jason. It's a pleasure.
So official. I appreciate it. And
Of course.
Brad, I could take a stab at your history, all of the funds you've raised from all these different types of investors across various verticals. But could you give us a little background on your path, everything you've done thus far to get here today?
Of course. Just as a caveat, I don't necessarily describe myself as a fundraiser. So opening the podcast as such may be misleading a little bit, but in my entrepreneurial journey and investor journey and advisor journeys, I've come across a lot of projects that were at a stage where additional funding could propel them to the next level. So I have been a part of those raises, both in the traditional markets with IPOs, as well as after Jobs Act in crowdfunding, both for equity and non-equity projects, and then in the past several years, of course, using tokens and blockchain and ICOs, STOs, throw in all the three-lettered flavor of the month terminology they like these days.
They do keep adding more acronyms to the mix, don't
yes.
they?
Every year it changes. You started with ICO, then it became token generation event, TG. Then we didn't like that. We said, we need to have something more formal. So STO, security token offering. And then when that didn't pick up the way everyone wanted, they said, we're going to do initial exchange offerings. IEOs are coming. So I think every 6 months to 12 months, we get a new acronym for about the same activity.
January, need to come out with a few new initials here.
Yes.
So let's take it even a step further back. How did you enter the business world? What were some of your early experiences? How did you find yourself working with startups and overall launch projects? What's the story?
So I love ice cream. I got an ice cream churning machine when I was a little kid and started making ice cream and selling that. That was my first business endeavor.
There you go.
And from there on, it was just a dream come true.
Yeah.
I'm a big ice cream mogul now. No, I started programming at an early age, and that led to a very genuine interest in computers and hardware and software, because in the early days of computers, you had to fix your computer. You didn't just throw it out and buy a new one because it was cheaper to buy a new one. It was actually the exact opposite. You wanted to make the hardware last as long as you could. So again, started programming, started improving and fixing the computers I had. That led to a very early career in software development and sales, of course. And from there on, I just tried different things. My career has been mostly in either service sector, banking, or technology. And then in the later part, I found myself merging all three of those tracks into one.
Absolutely.
Yeah.
I remember some of your consulting stories and
Yes.
Even merger acquisition type banking.
Absolutely.
Right.
Yeah.
Very nice. Very nice. And crowdfunding, I believe, is where we first crossed paths.
Yes.
And you have some records in equity crowdfunding, I believe, and have worked on some of the top projects. You had mentioned the Jobs Act and some of the bigger regulation crowdfunding, I should say Start Engine and similar type portal campaigns.
Yes. So again, just the timing was right. We got connected with a client who had filed one of the first three Regulation A+ exemptions in the U.S. to raise funds. It was a car company. Of course, they needed a portal because owned and operated sites were not even on anyone's radar at that time. We worked with a platform here locally, brought the project to them, and that for the longest until these REIT projects and real estate projects started coming into the Reg A plus space because they realized, they can lower the minimums for their funds. That project was the largest by both number of investors in it and the dollar figure raised at the end of the whole process. But it was a long process. There was a lot of learning. When you're one of the first three to talk to SEC and talk to any government agency and work them through the kinks of their internal processes and what's needed, it takes time. So that wasn't that wasn't a quick and easy one. Then of course, when the ICO started and we started raising funds globally from investors, that required a lot less qualification than a exempt and registered offering in US. Those numbers went tenfold, hundredfold. That's when the really absurd raises started happening in 2017.
Absolutely. That's one of the biggest distinctions I make from equity crowdfunding to cryptocurrency crowd sales is the investor success stories due to the liquidity events. There was definitely some people cashing out in 2017, whether it's percentages or a large portion of their holdings, where you don't come across that type of experience as much from equity crowdfunding investors yet. I should emphasize yet. And yeah, to go deeper into your knowledge base for cryptocurrency as well, I thought it was 2010, 2012, but you're saying 2009 was when you first got involved with Bitcoin, blockchain, cryptocurrency as a whole?
Well, there was only Bitcoin, and yes, 2009 is, and I always preface it with the following statement, I'm not a visionary or a pioneer or anyone smarter than, your average technology lover. So the only reason why I heard about Bitcoin in 2009 was because a friend of mine sent it to me. A friend of mine who was a CTO at a company sent me 3 packages, said, compile these, you're going to love it. Of course, I have a technical background, so he figured I would find it interesting, and I looked at it, I'm like, he's either going to take over my computer, because this is a keylogger and something malicious, or I'm going to have a lot of fun, because he's sending me nondescript packages to compile on my computer. It's a little eyebrow raising kind of situation. So I just compiled them. One was a Bitcoin node, a full node, and one was a wallet, and the other file was a miner. And these were all CLI, command line interface programs. There was no graphical user interface or anything like that. So I played around with it a little, started mining Bitcoin, and didn't think anything of it. So, that's where it started. I looked at where the community is, the conversations. I started mining Bitcoin probably a couple months before I actually read the Bitcoin white paper. That's how fortuitous the introduction was. It wasn't like I was looking for it or I was, a part of the original conversation as an active participant. No, someone said, hey, check this out. I trust my friends and pay attention when they say you should look at this. And, that was it. Now, a couple years later, it started gaining a lot of traction and people started getting interested in it. And that's when I got really excited, because now it wasn't just some program running on my computer and spewing, numbers here and there, but there was slowly starting to have value. Even quarter of a cent, 1/10 of a cent value for a ones and zeros on your computer was exciting. It wasn't a novel idea for me because I've been a gamer all my life and I've been in the gaming space. I accumulated a lot of digital currency, non-crypto, and game items and skins and what have you, even characters, and sold them on eBay, sold them on different platforms. So the fact that you can create something completely virtual that has no asset backing and then it having value for other people was perfectly fine. It made sense to me. Bitcoin mining having value was a new thing because I wasn't playing a game or trading with people. It was just machine was running, creating numbers, and suddenly someone said, "Hey, I'll buy Bitcoin for 1/10 of a cent," on one of the forums, and I'm like, "Wait a second. I have a few of those. Maybe I'll send them $1's worth." Something. Then made a few transactions, and for sake of time, I'm not going to go into all the shenanigans I did with early Bitcoins, but when it started establishing itself as a store of value, transfer of value, something that can be used as a financial instrument, I wanted to build a business around it. This was maybe 11, 12. And I went to a couple of people I know, both to partner up with and investors that I knew, and no one wanted to deal with it. Everyone was like, "No, that's probably a scam. It's going to go away. We don't believe there's any value in it." And so it went dormant for a while there. But what came out of it was all the other projects like Mastercoin and Litecoin and Ethereum. I participated in the original sale of Ethereum because that was, again, met Vitalik in 2014, I believe, at an event. He was passing out flyers explaining why this is important and we should do it. And
wow.
I was like, okay, I mean, he's young, but he has great ideas. Let's do this. And obviously, it's not just Vitalik. There were several other people involved with the project that brought validity and tech knowledge and structure to it. So the journey continued, and fast forward to 2016, it came to a point where I felt there's a huge tidal wave of blockchain projects coming. There's a lot of interest from general public because there was always a tight community, people really trying to do something different and change the world, and that was always there with blockchain, but there wasn't general interest. Like my parents didn't hear about Bitcoin until 2017. 8 years after I heard about it. So
right.
Once that general interest, both from press side and user side and financial side started, decided it was a good opportunity to focus solely on blockchain projects. And that brings us to today where we have 50 plus successful blockchain projects under our belt. They're in the top 100 list. They have a very respectable market cap size compared to any technology business. I mean, whenever in a couple years you reach hundreds of millions of dollars valuation or $1 billion valuation, that's a very difficult thing to do. Whether it's a blockchain project or biotech project or ad tech project, it doesn't matter. That means you identified a need and you did something right.
Absolutely. And what an evolution there from trading Bitcoins at 1/10 of a cent. It's fun thinking of what those values are today. Trading over $10,000 per coin, to actually working with some of the pioneers of Ethereum and other top coins, watching it now become part of a emerging market startup business model, standard in many cases. And I love how you mentioned that. It wasn't just how to launch a blockchain, how to launch a cryptocurrency, as much as when actually structuring everything today, Are you going to use these technologies? Are you going to use others? I've heard you make analogies in the past, whether it's from the investor side or the technology side, of how to choose the route you're going, but not necessarily leading with the word blockchain, not necessarily leading with cryptocurrency, and more focusing on the actual mechanics of the business and how it's going to grow and sustain. Can you shed any light on that? I mean, if someone's looking to launch a new business today, do you recommend them to look at, let's say fundraising through cryptocurrency vehicles? Do you recommend for them to build on blockchain, maybe explore other routes first? What are your overall insights towards the vertical with your in-depth experience?
Well, of course, I'm partial, so maybe I'm not the best person to answer that question. But I think what's important is you look at your individual situation and choose the path that makes the most sense for your project. So not every project needs to be a blockchain project. We don't need that. Also using blockchain because it's a brand new technology and the developers who actually get results are not, there aren't a lot of them and they're not cheap. I think if you can do something without using blockchain and you're a startup and you're not overfunded, that's a good starting point. Now, if your idea or business cannot exist without blockchain, as we call it, like a blockchain native project, then of course you have to use it. Same thing with fundraising. Some people have very strong networks who can invest, whether it be friends and family or coworkers or whatever professional networks they belong to. So for those people, it may make more sense to do a private raise, bring friends and family, those people in the network, and not necessarily try to raise money through the use of blockchain. Now, should you expect cryptocurrency? Of course. It's the same as should I accept Bitcoin for payment or USD? To me, it's the same thing.
Right.
It's a value transfer. When I get US dollars, I put them in a bank account and use them. When I get Bitcoin, I put it in a wallet. And because that's a little more volatile, if I'm going to need to use that Bitcoin in the next 6 months, I convert it to whatever local currency that I need to spend is. So taking the investment one way or another doesn't really make a difference, at least personally to me. The process, the methodology you use to take it should be as simple and affordable as you can make it. Don't complicate. Don't run an ICO if you don't know anyone, if you don't have throes of followers and a huge community to support your project, because you're going to go through all these motions and not get the results. If you know 10 people who can each put $500,000 and that's your 5 million seed, don't worry about doing an ICO. Do your seed, build your product, go to market, test, get some feedback, start getting revenue, start figuring out what your growth path is. We can talk about that too. You need to optimize there, but go to the easily accessible route of getting funds as opposed to just because everyone's doing a blockchain business. So, I'm going to do a initial exchange offering. Right. If you have no clue what an initial exchange offering is, but 100 angel investors, I would go with the 100 angel investors and do an angel round.
Of course.
If you have 50,000 followers and they're sending you money daily for your podcast or your Twitch cast or whatever, and you want to build a business and you don't know any investors, any angels or businessmen, and all you can do is ask your followers to support your business idea, then go do a token issue and engage that audience, activate them, and get the funds that way. So each project is going to be unique in how they get from 0 to 1, 1 to 2, 2 to 3.
Absolutely. And such a great message to share there. I think you got as many phone calls as I did in 2017 from people who knew nothing about the industry and thought they were going to raise $50 million overnight, or had some type of unrealistic business plan, if not just an idea. So Brad, focusing on the growth model, to go back to your point there, what do you recommend? What would, for anyone looking to start a business today, for anyone looking to go down an ICO path today, what would you recommend that they test? I, of course, look from the marketing perspective, but from the CEO role, are there elements of a business model that they should look to include, or what are your overall recommendations, whether from your past projects or just as insights in general?
That's such a complex question that, we can break that down and have several podcasts about each element in how you would do a growth modeling. I think obviously the starting point is your proof of concept. So you need to test different audiences, different partners, different marketing strategies to understand which one is going to be the best one for the budget you have available. Again, a growth model for a company that has several $1,000s per user for acquisition is going to be much different than a company that's trying to acquire users and customers for 50 cents. And so, again, without knowing the underlying business model and the product, it's hard to say, do this, this, this. I think early stages, brand equity is often overlooked. So people focus on KPIs that are much more tangible, like how many downloads, how many eyeballs, active users, monthly, weekly, things like that, which is great because you want measurable results to work with when you're optimizing. But there's also the value of brand equity and synergistic activities in marketing. So I would say always have something that brings visibility to your project. It may not bring direct investors, users, downloads, but visibility and brand recognition is equally important. I tell people, look, you may do a press release or you may go to a conference and speak and not get any downloads from it or not get any investors at the event. But if the next investor you talk to goes into the conversation, having seen your presentation and knowing about your project, you already conquered the first obstacle, which is trust and recognition of who you are and what you're doing. So how do you measure that? How do you measure the value of those activities? It's different for each project, but I always say do some activities that may not really play directly into any KPIs, but are generating brand equity and visibility for the project, and then have your other activities that are synergistic and complement and use that. You do a press release, then you market against that. Mm-hmm. So now you have a press release that's well read and gets the name out there, as opposed to doing a marketing campaign to get downloads, right? I mean, you should do both, but what's the right balance? It depends on the project. We like creating as many marketing buckets and promotional buckets as possible. And then testing, you do it, you see the results, you see the cost, and then if it's working and makes sense with the budget, double down. If it doesn't, you turn those off and look at new ideas, influencers, ad buys, conference series, road shows, online content, marketing, direct and indirect. I mean, you're also familiar with all these, but they need to
Sure.
come together so that if you're spending $10 in each bucket, at the end of the day, if you have 5 buckets of activity, you don't get $50, you get $100 because they each are synergistic and amplify each other.
And it's that tough balance of analytics, actually measuring all those results, all the key performance indicators, with the timeline and the burn rate of the funds. Love how you pointed out the actual brand equity, building the right relationships. And, speaking of relationships, and you talked road shows and conferences in there, should mention that you had one of the top conference series. I think you were doing a different country every week or two. You were partnered with one of the top thought leaders in the space on that. Is that a route that you recommend for everybody to do the conference circuit?
Let me clarify that. I don't recommend anyone start their own conferences. It is a full-time job. It requires a full team. So you can have a startup with 5 people,
right,
and successfully come to an MVP or revenue stage. A conference, to run it right, even for a couple 100-person conference, you're going to need 12 to 24 people. So it's very labor intensive, it's very time intensive. Don't run your own conference. Should you attend conferences? Absolutely. They're the best places. If you choose the right conferences and go with the right intentions, like when we were doing our series, we would ask every sponsor, everyone who wanted to come to the conference, who had questions, what are you looking to get out of the conference? Like, what's your goal? Regardless of you're getting a free ticket, comp ticket, or you're a $50,000 sponsor, what do you expect to get out? And then they would say, well, I'm looking for XYZ. And then we would say, okay, then what you're doing is correct. You will, if you actually are active and connect with people and do these steps, you will get that return on your investment. If someone says, I have no clue, or says something unrealistic, we would always tell them, don't come. Like, don't waste your time, don't waste your money, because yes, we did conferences globally. We had a very strong following. People flew from all over the world, both on the speaker, thought leader side, as well as on the attendee and sponsor side, to be a part of it. And it was an amazing experience, but it was a lot of hard work. And at the end of the day, people who didn't have a clear game plan did not get enough from the conference. So it's all about how prepared you are and what your expectations are. I mean, we had sponsors that said, if I get one investor at your conference, that's all I want. And they got that one investor because we introduced them. We knew exactly what they wanted. We made the introductions to the right people. It worked out. And then, we had projects that came and said, I want to get 200 sign-ups on my ICO page or app download or things like that. And then again, we told them, this is what you need to do. You need to have someone at your booth. You need to have these handouts, this. And they got those results. But people who just showed up, I mean, if you're new to the scene, of course, just show up and get the knowledge. Yes, take it all in. But if you have, if you're already in the ecosystem and you're looking for something more than that, don't just do conferences. Like, have a game plan going into them.
Game plan. Can't emphasize that enough, and really want to highlight that. I've heard people say, we're going to go to the conference. We've done 10 conferences. I've asked how many contacts they've received, the type of results, and seen clueless faces. And, let's say the game plan's not working, the optimization stage of this. Let's say it's conferences or maybe just, an overall marketing activation launch, a road show, maybe an advertising campaign, whatever it may be. What does a company do when something's not working? Have you pivoted in any of your projects, or any type of approaches that you recommend in terms of how to get it all to work via optimizations?
Well, as a founder, I've pivoted several times. And some worked, some didn't work. So as a founder, you should always listen to the crowd, listen to the audience, whomever that is for your project. And if there's not enough interest, take that to your heart. I mean, if people are saying we don't want to buy what you're building, don't keep building it, thinking they're gonna, come around, because that's not the right approach. If any of the marketing activities don't work, you need to ask yourself a couple important questions. One is timing, two is the audience, and three is the budget. So at this day and age, whether it's digital or analog outreaches and connections, there is a huge competition to reach the right audiences by different businesses, different brands. You wouldn't even think that you're competing against a petroleum company or Nike when you're a startup, but you may be competing for the same eyeballs and same attention. So I think if something is not working, you try to move those parameters up and down until you find the right audience. I mean, we did a digital advertising campaign for phone company. They offer phone plans, cell phone. And we started with their existing user base, which is tens of millions of people, lookalike audience.
Yes.
And ran a campaign, multifaceted, so not just one, platform, but multi-platform campaign. And, the first month, we didn't have any conversion. And we're using their existing client lookalike audience. And, if they hadn't had the right budget to keep going, it would have been a failed campaign. So
yes.
we tried it week after week, adjusting, tweaking, nothing, 2 weeks, nothing, 4 weeks, nothing. We go to the client and say, hey, we burned through X percentage of your budget and we have no ROI. And this is the strategy. And then we continued. Long story short, we cracked the code at week 7 and then had 27 or 37x return on all of the budget spent. But until that time, hadn't we had the right budget and the right mindset to change the audience, change the message, change everything as much as needed, it wouldn't have been successful. So always be ready to change.
Yes.
And change your perspective as well as your approach.
Yes. And I try to share that type of experience as much as possible, where if you shut something off too early, you may be missing the actual results in it. And, too small of a sample size. I mean, you mentioned 7 weeks out, even for a company with a, existing audience of that type of volume. I mean, wow, that's a powerful thing to share there. Anything in regards to budget that you recommend regularly?
Not really. It depends on the project.
Okay.
I mean, some you can really decipher and figure it out and really, get to a point where a minimal budget is returning amazing results. Mm-hmm. Maybe some virality kicks in, some audience participation. You get some, ambassadors that you don't have to pay. They just become ambassadors because they love the product, the service, the company, you personally. So it depends. I mean, when you start marketing anything, whether it's a new business, a new product, or something existing to a new market, or to expand market share, what you need to understand is, what are my strengths? Am I a thought leader? Do I have a big following? Does my company has a huge customer base? What is the feedback on our products and services? I mean, once you understand where to map yourself in the SWOT analysis, then you can say, okay, I'm going to play to my strengths and really put money behind that. And that amount changes for everything. Sure. Maybe your strength is you have unlimited funding. So you just burn through, you outspend everyone in that category and you burn through so much cash, but the return is bigger, so you can do that. And maybe your strength is your brand, so you don't have to go cash heavy, I'm gonna outspend, but you just play into the brand messaging and use that to get better results. It's very unique, and every time I talk to someone, I try to understand it as well as I can to give the right advice and recommendation.
Sure. And then lastly, in regards to scale, what have been the biggest elements to success of some of your most notable projects?
Partnerships.
Partnerships. Beautiful.
Partnerships. It's very hard to find the right mix of product, service, investment, strategy to scale very quickly and successfully.
Mm-hmm.
Some companies have done it. Most struggle for years before they can find it. The biggest hack or shortcut you can take is find a partner who has the client base you're looking for. So find a partner who can bring all of the people you want to be your clients or your users or however you want to engage them, and use their existing activities, use their existing goodwill and brand recognition, and grow that way. That's going to save so much money and time trying to individually acquire those people whom you may not even have a profile on. That the fastest growing companies, the most successful companies, are the ones that find non-competitive partners. So they're not competing for the same business, but they're just complementary, synergistic, and work with them. If they want a piece of your business, give it to them, because you're already giving out, equity when you're fundraising to do your campaign. I mean, sometimes you see amazing results with one or two partners that are so well aligned with your audiences that as soon as they start talking about your project, you see increasing scale. I mean, incredibly increasing scale, not from 1 to 10, but 1 to 1,000, 1,000 to 1,000,000, 1,000,000 to 10 million. And the second thing I look for is a global mindset, global approach. Don't build something for your tiny, town, city, country that you live in. Build something for the global audience. If you can choose between a product that's going to be highly localized or will have global appeal, go for the global appeal, because you may be in a small town in US or Europe and launch something to a couple thousand people, but if it appeals to the Chinese market, guess what? You have 1.4, 5, 6, whatever it is, billion people who can become your user now. And then you find the channel partner there. You find your partner, and sky's the limit. So those are the two things: a global mindset and openness to partnerships, early partnerships to really put some rocket fuel into your growth and scaling.
And I heard the combination of those two as well. And I've seen you do that in person. We've been in conferences in Istanbul, Hong Kong. I've seen, partnerships you've put together all over the world, really. And it's endless what could be done, but not if that global perspective isn't present in the actual development of the product, development of the brand to begin with.
Yeah, I mean, I've been privileged to live in, 5, 6 different countries now, and have always had a global culture, global mindset with everything I do, because I've been around the world and I've seen the opportunities. So our business is all, we look at it globally, and it's all through partners and referrals. So yeah, I mean, we preach what we do. It's not, oh, you go do it, but I'm gonna go in the other direction. No, if I'm excited about something, or if I deploy a strategy, I do it first internally for my business, and then see the results, and then of course bring it to others.
Absolutely. Any idea where this is all going? Cryptocurrency, startups as a whole, emerging markets. What? Any thoughts towards the future?
Let's break that down. So startups. 10 years ago, you had an idea, Silicon Valley, you moved to Silicon Valley, got some investment, started your business. Of course, if you're in North America, or if you're lucky enough to come to Silicon Valley. Today, startups don't even start raising funds until they have revenue. In Silicon Valley, no one's investing in startups that don't have revenue. It's not a lot of revenue, but they expect the founders to bootstrap to revenue stage. Not always, but that's the expectation. So it has been an interesting evolution where more is expected from founders because more is easily accessible to founders. You know, with all the outsourced CFOs and outsourced accounting and really clever marketing hacks and user acquisition hacks, and everyone learning 1 or 2 languages of programming in some capacity. Like my cousin learned C# to create games, and now he has a mobile game company that he built in the last 3 years. He has no background in programming or gaming other than being a gamer all his life. But the opportunities are such that people expect you to come to them with more proof. So that's the startup evolution. I think it's maturing. I think the ecosystem is global now, and with a global ecosystem, you know, more people have opportunities. So it's entrepreneurship has been democratized in the past 4 or 5 years, which is great. Because you never know where the next amazing idea and from whom it's going to come from. As far as crypto, I think crypto is going to become more diversified. So initially there was just Bitcoin, then there was Bitcoin and some Bitcoin forks. Then came Ethereum, now we have Bitcoin, Ethereum, and some forks, plus Neo, plus EOS. So it's getting more and more diversified as what people try to do using blockchain and using distributed models, which is extremely exciting for me because I think that's gonna lead to internet-like ubiquity. So, I mean, the blockchain is going to be ubiquitous across industries, but we're going to stop talking about it. We're not going to say, I'm a blockchain company. You're going to say, I'm an advertising company. I'm a marketing company. And no one's going to even care how you're doing it. And you're going to use 1, 2, or more blockchains. Maybe you use one for your ad network. Maybe you use another one for your accounting or documents. I mean, I think it's going to proliferate, and more well-funded institutional ideas going to come to life, as well as the same opportunity that exists now. Someone from Estonia or Slovenia, where, you know, prior to blockchain, they could build apps and they could build, but they were playing in the 2nd tier, 3rd tier markets, mostly copying other larger companies and localizing stuff. Now they can do something global. They don't even have to go anywhere. They can get investors globally. They can launch their product globally immediately through the distributed, decentralized model, have stakeholders, nodes globally. I think that people a lot of the time don't even think about how powerful that is. I mean, before you launched a business in one jurisdiction and you were beholden to that jurisdiction's rules and regulations, now it's both a curse and an opportunity. You launch globally. So you have access to all the markets in the world, but of course then you're beholden to regulations globally and you need to comply globally. But I think it's gonna accelerate growth in many industries that maybe didn't really benefit from prior technological advances as much as they will from an iteration of blockchain, because it may not even be blockchain, it may be hash graph, it may be a different distributed model, a different consensus structure, which we'll still call blockchain, but it may not consist of blocks that are chained together.
I'll be asking you about it beforehand, so you give me the tips as it's all coming to life. And just wrapping everything here, anything else you want to share with the audience? Anything else you want to leave people with?
Yes. Since we're talking about growth and how to achieve it, I think one of the most important things I want to leave your audience with is always think about how you're going to get to cash positive phase with your business. I see a lot of businesses who just want to fundraise. And fundraising, again, is a full-time job. It's very distracting from running a business. So if you start with the mindset that this business needs to take care of its employees and its founders and itself, you will save a lot of time. You won't waste your time trying to fundraise like Juicero or something like that, where hundreds of millions were raised and there wasn't really a viable business structure or business model or a market appetite for it. So I think trying to get to revenue as quickly as possible and then to profit as quickly as possible should be, you know, the most important growth metrics, much more important than how many users you have, how many active users, how many downloads, how many people on your network, or whatever the measure is. Those are really good traction measurements and sometimes vanity metrics, but
Right.
they're not, you know, they're not real indicators of economic success. And, you know, when you're trying to launch a business, economic success is what you want at the end of the day.
Absolutely. That's what ultimately can be scaled, and everything else is
Yes.
just to make you feel good when looking at reports.
Yes.
Well, Brad, thank you so much for coming in today. This has been great. All types of words of wisdom here, you know, with a great portfolio to share. So I appreciate you being a part of this.
My pleasure.
All right.
Hopefully you'll invite me back and we'll talk about something new.
All right. Sounds like a plan.
Thank you, Jason.
Thanks, Brad.